Hello, everyone, and welcome back to Boni's Life, your home for deep dive intellectual analysis of the financial world. I'm your host, Boni, and today we are embarking on a journey into the heart of the crypto market. The year is 2026, and the whispers of an impending alt season are growing louder. But are these just whispers, or are we on the cusp of a parabolic surge that could redefine fortunes? In this episode titled Potential Starts for the Next Alt Season, we will dissect the market with surgical precision, leaving no stone unturned. We will explore the fundamental state of the market, dive deep into on-chain data, and decode the technical setups that could trigger the next wave of explosive growth. We will also analyze the global events shaping our financial reality and, most importantly, equip you with actionable strategies to navigate this volatile landscape, whether you are a seasoned trader or just starting your journey. So, grab your notebooks, clear your minds, and let's get into it. First, let's establish a firm understanding of the fundamental landscape. As of mid-January 2026, the global cryptocurrency market cap is standing strong at approximately $3.36 trillion. This isn't just a fleeting number, it represents a significant and sustained level of capital in the digital asset space. The market has absorbed shocks, weathered storms, and has now built a formidable base. The 24-hour trading volume is a healthy $165 billion, indicating a vibrant and active market. More telling is that 95 of the top 100 coins are in the green, signaling broad-based strength, not just a rally led by a single asset. This positive sentiment is echoed by major institutional players. Van Eck, a global investment manager, has officially dubbed 2026 a risk-on year for crypto. This is a crucial shift in perspective from the cautious and at times bearish outlook of previous years. A risk-on environment means that investors are more willing to allocate capital to higher growth, higher risk assets like cryptocurrencies, driven by a search for yield and a belief in the sector's long-term potential. This institutional nod of approval provides a powerful tailwind for the entire market. Furthermore, the market has undergone a critical and healthy deleveraging event. In late 2025, we saw a dramatic 30% plunge in Bitcoin's open interest, falling from over $90 billion to around $65 billion. While this caused short-term pain, it was a necessary purge of excessive leverage and speculation. A market built on a foundation of over-leveraged positions is a house of cards. This deleveraging has cleansed the system, creating a much healthier and more sustainable foundation for the next leg up. It means the current rally is driven more by genuine spot demand and less by speculative froth, which is exactly what we want to see for a durable bull run. Finally, the narratives for 2026 are incredibly compelling. According to CoinGecko, we are seeing a convergence of powerful trends. Meme launchpads and ICO launchpads are back, but with more sophisticated models. Prediction markets are gaining significant traction, offering new utility. Privacy and zero-knowledge technology is no longer a niche interest, but a core demand. And the growth of perpetual decentralized exchanges, or perp DEX, is challenging the dominance of centralized players. These are not just buzzwords. They are burgeoning ecosystems attracting developers, users, and capital, and they will be the engines of the next alt season. Now, let's move from the fundamentals to the digital trenches and examine the on-chain data. This is where we can see the raw, unfiltered actions of market participants, and the story it tells is fascinating. In the last 24 hours, we witnessed a massive $700 million short squeeze. For those new to the term, a short squeeze is when a heavily shorted asset suddenly rises in price, forcing short sellers to buy back their positions to cover their losses, which in turn drives the price even higher. This wasn't just a random event, it was a powerful signal that the bears are losing control and the bulls are stamping their authority on the market. Of that $700 million, a staggering $380 million were Bitcoin shorts, with the remainder being a mix of altcoins, primarily Ethereum. This is a clear indication of a market-wide sentiment shift. But the story doesn't end there. The institutional floodgates are well and truly open. On January 14th alone, Bitcoin ETFs saw a colossal inflow of between $760 million and $843 million. BlackRock's IBIT led the charge, pulling in a massive $648 million. The cumulative inflows into US spot Bitcoin ETFs have now surpassed $56 billion, with total holdings reaching an incredible $122 billion. This is not retail money, this is serious institutional capital, and it provides a constant underlying bid for Bitcoin, creating a floor price and a launchpad for further upside. And it's not just Bitcoin. Ether-focused ETFs also saw renewed interest, with $130 million in net inflows. The institutions are here, and they are buying. This influx of capital has created a very clear picture of support and resistance. On-chain data shows a critical support level for Bitcoin at $93,000. A break below this level could trigger a cascade of long liquidations totaling over $1.2 billion. This is a key level to watch. As long as we hold above it, the bulls are in control. On the altcoin front, we are seeing a surge in open interest, which is a measure of the total number of outstanding derivative contracts. Cardano has seen a 13% surge in open interest in just 24 hours, totaling nearly $850 million. Uniswap is also showing significant activity, with over $411 million in futures open interest. This tells us that traders are not just focused on Bitcoin. They are actively positioning themselves in altcoins, anticipating a broader market move. All right, we've covered the what and the why. Now let's get into the when and the how. It's time for the technical analysis. This is where we look at the charts, the patterns, and the price action to identify our entry and exit points. And the chart of Ethereum is frankly a thing of beauty. We are seeing a confluence of incredibly bullish patterns. The most significant is the massive inverse head and shoulders pattern that has been forming on the weekly chart. The head of this pattern was the capitulation low we saw in late 2025, around the $1,000 mark. The shoulders have formed between $1,500 and $2,000. According to the legendary chart pattern analyst Thomas Bulkowski, this pattern has a success rate of around 83% in bull markets, with an average gain of 45%. If this pattern confirms, the measured move would take Ethereum to a staggering $7,000. But that's not all. On the daily chart, we have a confirmed triangle breakout and a cup and handle pattern, both of which are powerful bullish continuation patterns. The cup and handle pattern has a price target of $4,000. So we have a series of patterns, each confirming the other, all pointing to significant upside. The key level to watch is the breakout zone between $3,400 and $3,500. A sustained move above this level on high volume is our trigger. That is the moment the rocket leaves the launchpad. Our support is at $3,100, with a stronger support level at $2,900. A break below $2,900 would invalidate the immediate bullish setup, so that's our line in the sand. Now, let's turn our attention to XRP. XRP is currently in a consolidation phase, trading between $2.05 and $2.26. The immediate resistance is at $2.17, a level it has struggled to break through. However, with the positive news of Ripple's license approvals and the potential for regulatory clarity from the new crypto bill, the fundamentals are aligning for a breakout. A move above $2.26 would be our trigger, with a target of $2.50 and then $2.60. XRP has been a laggard in previous cycles, but this time, with the regulatory clouds parting, it could be a coiled spring ready to explode. And of course, we have to talk about Solana. Sol has been a monster with a 6.7% gain this week alone. It's currently trading at around $144. The bull case for Solana sees it moving to the $150 to $260 range. The layer 1 narrative is still incredibly strong, and Solana is a key player in that space. It's fast, it's cheap, and it has a vibrant ecosystem of developers and projects. We will be watching for a consolidation above the $150 level as a sign of the next leg up. Beyond the big three, there are a number of other altcoins that are showing incredible strength. Monero is up a staggering 56.8% in the last 7 days. The privacy narrative is gaining momentum, and Monero is the king of privacy coins. Internet Computer is another one to watch, up 35.5% in the last week. And we can't ignore the meme coins. Pump.fun is up 23.6% in the last 7 days, and the meme launchpad narrative is just getting started. These are the high-risk, high-reward plays that can deliver astronomical gains in an alt season, but be warned, they are not for the faint of heart. Now, we must zoom out and look at the bigger picture. The crypto market does not exist in a vacuum. It is deeply intertwined with the global macroeconomic and geopolitical landscape. And in 2026, the stakes have never been higher. The single most important factor influencing all markets, including crypto, is the Federal Reserve. We are currently in a state of high tension. Inflation remains stubbornly above the Fed's 2% target, which would normally suggest a hawkish stance. However, we have immense political pressure from President Trump for aggressive rate cuts. Trump has made it clear he wants a run-it-hot economy, and he is expected to replace Fed Chair Jerome Powell in May with a more dovish appointee. This creates a tug-of-war between economic data and political will. A dovish Fed printing money and lowering rates is rocket fuel for assets like Bitcoin. As Arthur Hayes, the founder of BitMEX, bluntly put it, if you ain't long, you is wrong. Adding another layer of complexity is the impending Supreme Court ruling on President Trump's tariffs. This is a true wild card. Prediction markets are giving it a roughly 30% chance that the court will uphold Trump's tariff authority. If the tariffs are struck down, some analysts are predicting a massive risk-off event, a dump of a lifetime, for assets like Bitcoin, as it could signal a less inflationary future. Conversely, if the tariffs are upheld, it could be seen as a continuation of the inflationary policies that have driven investors to seek refuge in scarce assets like Bitcoin. This is a binary event with massive implications, and it is creating a palpable sense of tension in the market. Finally, we have the long-awaited clarity on U.S. crypto regulation. In a landmark move, a bipartisan bill has been introduced in the Senate to create a comprehensive regulatory framework for digital assets. This is the moment the industry has been waiting for. The bill aims to clarify which tokens are securities and which are commodities, giving the CFTC, the industry's preferred regulator, authority over spot markets. Crucially, the draft legislation would grant assets like XRP, Solana, and Dogecoin the same treatment as Bitcoin and Ethereum if they are included in an ETF by 2026, classifying them as non-ancillary assets exempt from strict SEC securities rules. This is a game changer. It removes the regulatory overhang that has suppressed the price of many altcoins and paves the way for a new wave of institutional adoption. So we have a perfect storm of bullish fundamentals, positive on-chain data, explosive technical setups, and a shifting global landscape. The question now is, how do we trade it? The answer depends on who you are as a trader. Let's break it down. For the beginner trader, if you are new to the space, my advice is simple. Keep it simple. Do not try to time the market perfectly. You will fail. Instead, focus on dollar cost averaging, or DCA, into the blue chip assets, Bitcoin and Ethereum. DCA means investing a fixed amount of money at regular intervals, regardless of the price. This strategy removes emotion from the equation and allows you to build a position over time. Start with a small percentage of your portfolio, and as you become more comfortable, you can gradually increase your allocation. Your goal is not to catch the next 100 times meme coin. It is to build a solid foundation in the two most established and resilient assets in the crypto space. And most importantly, do your own research. Don't just take my word for it, understand what you are investing in. For the intermediate trader, if you have some experience and are comfortable with more risk, you can start to diversify into the top-tier altcoins. I'm talking about Solana, XRP, and Chainlink. These are projects with strong fundamentals, active development, and large communities. You can use a combination of DCA and strategic entries based on the technical levels we discussed earlier. For example, you could have a standing order to buy XRP on a breakout above $2.26. You should also be paying close attention to the Bitcoin dominance chart. A breakdown in Bitcoin dominance is often the final confirmation that alt season has begun. When you see Bitcoin dominance start to fall, that is your signal to rotate some of your Bitcoin profits into altcoins. For the advanced trader, For the seasoned veterans, the degens, the ones who live and breathe this market, this is your time to shine. You should be looking at the high risk, high reward plays. The meme coins, the privacy coins, the gaming tokens, these are the assets that can deliver the life-changing gains, but they can also go to zero. You need to be an expert in risk management. Use small position sizes, take profits along the way, and never risk more than you are willing to lose. You should also be actively using on-chain analysis tools to track whale wallets, monitor exchange flows, and identify emerging narratives before they hit the mainstream. You are not just a trader, you are a digital detective, and the clues are all on the blockchain. So there you have it, a comprehensive, multifaceted analysis of the current state of the crypto market and the potential for an imminent alt season. We have a market that is fundamentally strong, with institutional capital pouring in. We have on-chain data that is screaming bullish, with a massive short squeeze and a healthy deleveraging. We have explosive technical setups in Ethereum, XRP, and a host of other altcoins. And we have a global macroeconomic environment that, while complex, is leaning towards a risk-on sentiment. The stars are aligning. But remember, nothing in this market is guaranteed. The future is unwritten. But with the right knowledge, the right strategy, and the right mindset, you can position yourself to capitalize on the incredible opportunities that lie ahead. This is not just about making money. It is about being part of a technological and financial revolution. It is about taking control of your own financial destiny. So do your research, manage your risk, and stay informed. The next few months are going to be a wild ride, and I will be here with you every step of the way. Thank you for joining me on this deep dive. If you found this analysis valuable, please hit that like button, subscribe to Boni's Life, and share this video with anyone who is serious about understanding the crypto market. And as always, I want to hear from you. What are your top altcoin picks for 2026? What are your trading strategies? Let me know in the comments below. Until next time, stay sharp, stay informed, and stay profitable.